In the world of personal finance and wealth creation, Robert Kiyosaki stands as a luminary, challenging traditional notions and urging individuals to rethink their approach to money. One of his compelling insights revolves around the idea that money isn't safe in the bank. In this video, we'll delve into Kiyosaki's perspective and explore 5 proven assets that he considers safer and better than hoarding cash. Number 1. Real estate investments. Kiyosaki has long championed the idea that real estate can be a powerhouse asset. Beyond the value of homeownership, income-generating properties provide a reliable source of passive income. Whether through rental properties or real estate investment trusts, real estate assets have the potential for appreciation and can act as a hedge against inflation. Real estate is one of the most popular alternative assets due to its stability and tangibility. Unlike stocks or bonds, real estate offers a physical asset that you can touch and see. This can provide a sense of security, as your investment is not solely based on the performance of the market. Additionally, real estate has a long history of appreciation, making it a reliable option for long-term growth. One of the main advantages of investing in real estate is the potential for income generation through rental properties. By purchasing a property and renting it out, you can earn a steady stream of passive income. This can help offset the cost of owning the property, such as mortgage payments and maintenance expenses. Over time, rental income can even surpass your initial investment, allowing you to achieve financial freedom and security. Real estate investors can also take advantage of various tax deductions such as mortgage interest, property taxes, and costs associated with rental property management. Number 2. Precious metals such as gold and silver. In turbulent economic times, precious metals like gold and silver often shine as safe haven assets. Kiyosaki emphasizes their role in preserving wealth, citing their historical resilience during market fluctuations. These tangible assets are not subject to the same volatility as currencies and can act as a hedge against economic uncertainty. This is because precious metals have inherent worth and are not tied to any particular currency or government. Investing in precious metals can offer diversification to your portfolio and protect your wealth against inflation. Precious metals have a low correlation with other asset classes, such as stocks and bonds. This means that when other investments are struggling, the value of precious metals may rise, providing a buffer to your overall portfolio. Additionally, precious metals have a long history of holding their value and have been used as a store of wealth for centuries. Unlike fiat currencies, where governments can print unlimited amounts, the supply of gold is limited. This scarcity is part of what maintains their value. When investing in precious metals, you have the option of physical ownership or investing in paper assets, such as exchange-traded funds. Physical ownership allows you to have direct control over your investment and provides a tangible asset. However, it also comes with the responsibility of storage and security. On the other hand, investing in paper assets can offer convenience and flexibility, but may not provide the same level of security as physical ownership. Number 3. S&P 500 Index Fund. Holding an investment in the S&P 500 Index is often seen as better than holding cash due to the potential for higher returns and the power of compounding. Over the long term, the S&P 500 Index, representing a broad diversification of the U.S. stock market, has provided significantly higher returns than the interest earned from holding cash in a traditional savings account. From its inception, the S&P 500 has had an average annual return of approximately 10% before inflation. Investing in an S&P 500 index fund is a type of passive investing, meaning it requires little time or knowledge about individual companies. This makes it a more straightforward investment strategy for individuals who do not have the time or inclination to manage their investments actively. By holding the S&P 500, you're investing in 500 of the largest companies in the U.S. across a wide array of industries. This diversification reduces the risk associated with individual companies or sectors performing poorly. Many companies included in the S&P 500 index pay dividends, which can provide an income stream to investors and can be reinvested to grow the investment further. The combination of reinvesting dividends and the long-term trend of upward growth means that your investment can grow exponentially over time due to the power of compounding. Number 4. Cryptocurrencies. In the age of digital transformation, Kiyosaki recognizes the potential of cryptocurrencies, particularly Bitcoin. While acknowledging their volatility, he sees them as an alternative to traditional currencies and a way to diversify one's portfolio. Cryptocurrencies operate independently of central banks and governments, offering a decentralized form of wealth preservation. One of the main attractions of cryptocurrencies is their potential for high returns. In the past, some cryptocurrencies have experienced exponential growth, resulting in substantial profits for early investors. Bitcoin's growing adoption as a payment method by individuals and in the corporate world has increased its appeal as an investment. If this trend continues, demand for Bitcoin will grow. Cryptocurrencies represent the future of finance, with the potential to disrupt traditional banking systems and revolutionize how we transact. As technology continues to advance, cryptocurrencies are likely to become more widely adapted and integrated into our everyday lives. Investing in cryptocurrencies can provide an opportunity to be part of this digital revolution and potentially benefit from its growth. However, it's crucial to acknowledge that Bitcoin and other cryptocurrencies, like any speculation, are not without risk. Its price is highly volatile, and it has experienced dramatic price drops. It's also a relatively new and complex technology, and future regulatory decisions could impact its value. Furthermore, while the decentralized nature of Bitcoin has benefits, it also means there's typically no recourse if your Bitcoins are lost or stolen. Number 5. Stock market. Participating in the stock market allows you to become a part owner of publicly traded companies. Stocks represent ownership in a company, and as the company grows and becomes more profitable, the value of your shares can appreciate. This capital appreciation can contribute significantly to your overall investment returns. Stocks have historically shown the potential for higher returns compared to the interest earned on cash deposits. Over the long term, well-performing stocks can outpace inflation and increase in value, providing a greater opportunity for wealth growth. Many stocks pay dividends, providing investors with a regular income stream. This can be particularly beneficial for those seeking passive income in addition to potential capital gains. The certainty offered by cash lies only in its nominal value. $100 today will still be $100 in future years. Low inflation will see the money retain its spending power to some degree, but high inflation will erode it quickly. Investing in stocks allows you to potentially preserve and increase the real value of your money. Robert Kiyosaki's stance on money challenges the conventional wisdom of keeping large sums in traditional bank accounts. Instead, he advocates for strategic and diversified approaches to wealth preservation and growth by considering assets like real estate, precious metals, index funds, cryptocurrencies, and stocks. Individuals can align their financial strategies with Kiyosaki's principles and build a resilient foundation for long-term prosperity. Make sure to let us know your thoughts, and don't forget to like today's video. We'll see you in the next video. Thanks for watching.